Afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, May the 19th. Just wanted to touch briefly on what we saw in markets last week. And we have seen 6 straight down weeks in the marketplace. So, wanted to kind of lay out a game plan for you as a long term investor of what to do when we're in these correction slash bear market territories, and then kind of see what we and kind of touch on where we see markets moving from here. So another down week, as we said, the S&P 500 finished the week down 2.10%. The mid cap index, as measured by the S&P 400, was down a little less at 1.8, and small caps, as measured by the S&P 600, were down less at down 1.4. Now, they all are around down about 15% year to date on those major indices, and the NASDAQ is in bear market territory. So I wanted to touch on the definition between a correction and a bear market. And as the SEC defines it, a bear market is a market that is down 20 or more percent in 2 months, or 2 months or longer. And the NASDAQ has hit that bear market territory, with it being down over 20% this year from its most recent highs. The S&P 500 was on the doorstep last Thursday, and we saw a nice market rally Friday. However, as we walked into this week, we did see some heavy selling pressure yesterday in the market, and we'll touch a little bit on that later. But what do you do as a long-term investor as we are in this correction phase in the stock market, and a pretty heavy correction that we are seeing taking place since the start of the year and really back to November of last year? But the first thing that we have to do is we have to take a deep breath and not panic, and don't make any rash decisions. Take a step back, understand corrections and bear markets are natural parts of the market and the ebbs and flow of the market. Remember, the long-term rate of return in the S&P 500 is around 9%. That includes all of the downturns and all of the bear markets and corrections that take place over time. We typically get a 10% pullback every 2 years, and we have not seen a 10% pullback in over 3 or 4 years. So this is very normal market behavior. So don't rush to make any bad judgment calls. Make sure, and of course, that you have all of your immediate liquidity needs taken care of, and evaluate that and raise some additional cash if you need some for liquidity reasons. But other than that, look at your portfolio, look at your winners, look at your losers, and look at the ones that you are looking to get rid of that you can now go out and find and replace with something else that you've wanted to buy maybe for a long time but has been too expensive. And these types of corrections, it is across the board. Everything gets dragged down. Good companies get dragged down with the bad companies. So it's a great time for you to take a bad stock and replace it with a company that has better prospects moving forward. Another key thing and reason why to do that is if you do have some losses and you have some stocks or some companies that have fallen out of favor in the marketplace, now is a great time to take losses. Losses are valuable. They offset future gains. They offset maybe some gains you have from earlier this year, but they can be used very to your advantage from a tax perspective moving forward. And again, you're selling something that's down to buy something else that's down that may have better prospects to rebound and move higher. Keep focused on your strategy and what it is that you are trying to accomplish and your discipline that you've set forth with. And remember, when market corrections and times like these happen, this is when the wise and the brave are going in and buying. You oftentimes, everyone knows of Warren Buffett, and I always like to point to this, is when do you think Warren's in there buying? And I would begin to tell you from his 13F filings that Warren Buffett is in buying during this market correction. You're taking something and you're buying it on sale from where it was recently. And if you do have that long-term time horizon, anything over a year to 2 years on what you're looking to do, you're now getting the market deeply discounted and on sale. So follow these steps, look at those. If you have questions about that and how it applies to you, call us. But I wanted to also touch on where we see markets moving from here and some really great technical analysis that we've gotten over this last week. And what we are starting to see, even though we had a dramatic down day yesterday, one of the encouraging things is the volume was relatively light compared to what we have seen on most major down days so far this year. What does that tell us? That is classic bottoming behavior. Now, I'm not calling a bottom. I'm just saying that is what we are saying, and we could be setting up to do that and enter into a trading range over the summer, but we're running out of sellers in the marketplace. And if you actually look at the money flows of individual equities, they're actually starting to have some more positive divergence from what has been the heavy selling pressure that we've seen. So all encouraging signs to set up for a rebound, which is why it's important that you stay invested during these times as an investor. If you try to time the market, remember that's a fool's game. No one has a crystal ball and can see the future. Stay invested, follow your game plan, make the upgrades that you need to your portfolio, and you'll position yourself to do better after the correction is over than you would have been before the correction. So as always, if you have questions about what's going on with your individual portfolio or ways we can help you navigate through this time in the marketplace, feel free to give us a call. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. Have a wonderful week, everyone. Thanks so much.